Breakouts can be a very effective trading strategy when it comes to markets that are really picking up momentum and can signal a new trend starting. But how do you trade these, and what are the drawbacks, and what can we do to try and improve on them? I thought we'd look at the idea of breakouts when it came to trading, because it has been an effective strategy over the last 12 to 15 months or so with so much momentum in the market. We look at a breakout in oil, the breakout we saw in November through the old highs of 44, saw the price carry on. We've had another breakout just during June through about 68, the highs that we saw in early March. It's traded about $4 higher. So as usual in this video, I'll talk a bit about what breakouts are, why they happen, the different filters we can put in place, the drawbacks, then we'll come back onto the platform and look at things in more detail. Hello, I'm David Jones from Capital.com, and I thought this time around, let's do one of our videos on trading strategies. As you know from watching the channel, big fan of following trends. There have been some great trends in markets over the last 12, 15 months or so. Some of them are still going. So I thought let's take a look at the idea of trading breakouts. So as usual in this video, I'll talk a bit about what a breakout, breakdown is, the different approaches, the pros, the cons. Then we'll jump onto the platform and take a look at some real markets and apply those techniques to those markets. As usual, if you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel, and it means we can continue to push out lots of different content. And of course, every Friday at 2:30 UK time, we do live streams. If you're subscribed to our channel with the alarm bell notification pushed, you get a message off YouTube just as we're about to go live and look at a whole host of different markets. But let's get into it. Let's get into today's topic and take a look at the idea of breakouts in a bit more detail. So the obvious first point to cover, what is a breakout or a breakdown if the market's going the other way? It's basically, where we have a market, let's say that's been hitting a high on a regular basis that it can't get through. So there's a level in the market that the market, every time it runs up to it, we see sellers come in and the market gets pushed down, and then it manages to break through. So this is a breakout. If we're looking at it the other way around, it's a level the market keeps hitting on the downside, it's supporting the market, and then bang, the market goes through it. So when we're talking about breakouts or breakdowns, that's what I mean. And the reason they can be important and they can be good trading setups is because it can be a suggestion that perhaps a new trend is starting. So it could be a sign there's a fresh injection of momentum, either up or down, coming into the market. So it can alert us to perhaps a new move starting in the market. As ever, there are a few different approaches to trading these. There are various filters or time filters we can place on top. So let's talk about some of this. The obvious way is just to trade it immediately. For example, if oil has been banging up against $70 a barrel and can't break through, and then you look at it and it's trading at $70.50, it's broken through 70. The trade immediately approach is to jump on to that breakout straight away, be a buyer, and see where it goes next. So that's really not waiting for any additional confirmation. The other way is to apply a time filter. So let's go back again to oil, for example, and say, okay, well, we think that $70 has been a barrier. It's broken through 70. You may want to see it close for 1 day. So you wait, for example, the market close or the end of the day to make sure it stays above 70. So that's one possible filter. The other filter we could have is the percentage filter. So if we have a level that gets broken, we want to see it broken by a certain percentage. So again, let's use $70 in oil. You may want to see it break by your percentage filter, maybe 1.5%. So you want to see the price of oil push through by 1.5% of 70, so about $1 through oil before you consider it a valid breakout. The other approach is wait for a pullback. So if we see the level get broken, we know that markets don't move in a straight line. You may want to be patient, see if the market pulls back. Do you get a better entry point rather than just jumping on the break straight away? And of course, the final option is to do nothing. You don't need to trade everything out there that's moving. Breakouts may not suit your particular style of trading. And I'm a big advocate that doing nothing is always an option in trading. We don't need to be in the markets all the time. But I do think breakouts are worth paying attention to because they can suggest there's a shift in market sentiment. But the drawback with breakouts, as with everything, because nothing works all the time, there are always false breakouts. There are always moves through a level. We think, oh, here we go. Here's a new trend starting, only for it to fail and pull back into the range it was in before. So applying risk management, as ever, using stop losses is a really important part if we're going to trade breakouts as part of a trading strategy. So enough chat about the theory. Let's take a look at some real examples on our platform. So let's start things off with oil because that's what I was talking about there. So if we look at the move we saw off the lows last year in April, so the cash market price traded down to about $11. The price had this great bounce back, but you can see just what a problem was during August, up towards $44 a barrel. Same again, end of August, doesn't get anywhere near it. Trades near it again in November, backs away, and then bang, we have the break. So it's this sort of move that we're looking for. So the market breaks out. Let's zoom things in. So there are the August highs, and here's the break in November. So it can be a suggestion that perhaps things are changing. A level that in the past had been a problem doesn't appear to be a problem anymore. And there's a couple of ways we could have traded this. There's the trade immediately approach I talked about. We just jump on the breakout. Perhaps we wait for a certain percentage through, or even waiting for a pullback. We did eventually, over the course of the next week and a half, get a pullback to $44, the previous breakout level. Then the market took off, and you can see here, carried on higher. We had a similar setup again in early January. The market stalled at $54 middle of January, and it wasn't until the 2nd of Feb, so a good couple of weeks later, that we had the breakout again. I mean, this was a breakout that really took off. We didn't really get a pullback. So if we'd been waiting for one there, we'd have missed the opportunity. Let's jump forward again. And here's the latest break. The price for oil had been somewhat sideways in recent months, traded in March as high as almost $68 a barrel in March. And you can see coming back up close to it during April and May. And it wasn't until the beginning of June we've had a break. We've had a breakthrough again, that O level. So again, a classic breakout trade. And so far, the price has moved around $4 higher. So it can be, as you see here, an effective way of trading a market, but it doesn't work all the time. There is such a thing as false breakouts. If we stick with oil for now, I suppose what we were seeing here in March of this year, the price had dropped to a level in Feb, dropped as low as $58.50, broke below it very briefly to $58.28 in March, and then broke again to $57.20 on the 23rd of March. So this was a breakdown, but it was a false breakdown. So just because a level breaks doesn't necessarily mean we're going to see the follow through, which is why it's really important to have things like stop losses in place. But if we jump on another market, so this time around the S&P 500, the broader US stock market index, and you can see there are various highs left on the way up. So if we go January of this year, the highs from January around 38.70, eventually broken in early Feb. The market pushed higher, but then did pull back. Then we saw those mid-Feb highs taken out by the market here. But again, doesn't really follow through so strongly. We still get the pullback. So for the S&P, jumping on it immediately in these cases would have been one strategy. But if you were waiting for the pullback, you did still have a pullback until the move that started the 1st of April. So the 1st of April took out those old levels around 39.90. And this ended up being a very strong move, trading as high so far into May at 42.45. And what's interesting, I think, with this market is that after a period of trading sideways for almost a month now, in the last few days, we've seen the market start to break out once more. So again, is this the sign of a market picking up momentum? It's early days, and so far, we've only really crossed through that level for a couple of days, but it could be a suggestion that perhaps we're going to see the next trend in the S&P starting. Of course, it's a phenomenon we see in all sorts of markets. Markets have trends by definition. Trends will usually break previous highs or lows. Here's Apple. So the highs for Apple stock in January 2020 came in around $82 a share. Then, of course, markets fell heavily as the coronavirus pandemic spread. And it was really the 9th of June in 2020 that the level broke. And we can see it breaking and then actually sells off for a couple of days. We get the pullback before the market moves much higher. So that was a breakout that worked really well in Apple. But again, it doesn't work all the time. Here's something that so far has proved to be a false breakout. So early September of 2020, Apple trades up to about $138.50. The level breaks in January of this year, but we didn't get any follow through. It ended up being a false breakout and the price dropped back to $117. So if we're going to try and catch this fresh momentum in the market, moves like this does reinforce the importance of having stop losses, of covering your risk if the breakout ends up being false. We see it in shorter term charts as well. Here's a chart of gold, an hourly chart here we're looking at. And we can see here from the third week of April, trades up near 1800, comes back to it in early May. So we've had a few attempts here on this level. So arguably this should reinforce the strength of a breakout if it occurs. And then we get the move. So the move happens about the 6th of May. Gold finally breaks $1,800, pushes to 1840. We get a bit of a sell-off, bit of a pullback to 1810, and the market pushes higher up to 1883. So just to demonstrate here that it does work on the shorter term charts as well, but we still get false breakouts. So it's important to have some sort of risk management in place. And finally, Bitcoin. Same sort of setup. It doesn't really matter what market it is. What we're looking for is the break and momentum. So towards the end of last year, 20,000 was being something of a problem in November and into December. And then finally, middle of December, we get the break through 20,000. The market moves higher. Then we have an important high left up at around 42,000. That was set in the second week of January. A month later in February, the level breaks. And again, we get the move higher. And of course, since then, we've had the breakdown through a previous low in April. April the 26th was the low, around 47,000. Bitcoin breaks it and then trades eventually so far as below 32,000. And since then, we've been pretty sideways. I suppose if we were watching for a breakout at the moment, let's take a look on the hourly charts. So over the last few weeks, Bitcoin has really struggled in this 41,000 to sort of 42,500 area. So if we were waiting to see, is there going to be a breakout upwards in Bitcoin, then 42.5, I think, is one level to watch. On the downside, clearly, from 30,000 through to 31,000. So we have these clear areas that we'll be watching to see if there's a breakout trade coming. As I say, it's something that doesn't work all the time because nothing works all the time. When it comes to trading strategies, but that's why it's important to have risk management and stop losses when trading breakouts. But I do think they can be a really interesting thing to keep an eye on in markets, just in case there is a major new trend about to get underway. That's it for this introduction to trading breakouts. I hope you found it useful. We'll do plenty of other strategy videos as the year goes on. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your trading. For more trading videos just like this, please subscribe to our channel.